Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Scott Bauer. Hey there, Scott.
Jeff, how are you?
Well, it's great. Midterm elections here in Chicago. Vote early, vote often. You know the motto here. But it's interesting to see the midterm elections, a lot to digest in the market. But what are you focused on, Scott?
You know, I'm really looking at some upside continuation in the marketplace here. Unless we get just a big surprise here, I think that the base has been set here to get an upside going into the fourth quarter.
So the pullback is over?
I think it is for right now.
All right, fair enough. Let's get into this first lightning round, Scott.
Absolutely.
Equities bounce. You hit the nail on the head. You have seen a substantial bounce off that S&P 500. We went down and tested 2603 being the low. Now we're significantly above 2700. Is this continuing momentum to the upside?
It sure looks like it, and I am looking for this continued momentum. And a way to express this view would be buying the E-mini S&P 500 end of month 2760 call spread or call and selling the 2790 call, making the $30 wide call spread.
Oh, this makes a lot of sense. December and the E-mini being the underlying futures contract. And we're interested to see that this is currently being priced out with the ES trading around 27.45. But this takes you past Thanksgiving. Why are you going out past Thanksgiving? Just want a little more momentum to play out?
Exactly. I want to let the election settle down and then, you know, the market to really just play into the focus with the election being in the rearview mirror.
Fantastic. And please remember, these are trade examples, not trade recommendations. Let's move into the second lightning round, Scott.
Let's do it.
FANGs falling. Well, it was a sensational move down in the month of October. We saw the NASDAQ 100 really take it on the chin, down nearly 9%. But it's interesting to see the volatility, the elevated volatility. We talk a lot on striking options and how to embrace that. So what I'm looking at this week, Scott, is selling a put spread. We've had a lot of volatility. Do you like the way I'm approaching this market despite the fact we are continuing to see volatility?
No question about it, Jeff, because in this type of setup here, you don't necessarily have to have the rally, and with the excess premium here, gives you a little bit more protection on the downside.
Yes, and the trade example I want to utilize is selling the week 3. That's only going out to next Friday, November 16th. But I'm selling the week 3 E-mini NASDAQ 6500 put. That's about 4% lower from where we are right now. And I'm buying that same expiration week 3, but I'm going down to the November 6250 put. So it's 250 points wide. This trade expires, like I said, November 16th. And currently, when we price this out, the NQ was trading at 69.72. And remember, the December E-mini NASDAQ is the underlying futures contract, Scott.
Absolutely, and I think this put spread allows you to collect about 18 ticks on that.
Yes, and I know the market was moving around a lot, but collecting $360 and being happy to see the market go back down and test there at these levels, we're trying to utilize technicals to line up to our view, our trade example on how we want to express these technical expressions. So great stuff, Scott. I want to thank you for coming on today, as always, doing a great job here on Striking Options. We also want to thank you, and make sure to tune in every week as we continue to strike options.